Everyone, thank you so much for joining us today, myself and Nick, for this webinar. We're really excited about it. Topic for today, as you all know, does your sales comp plan encourage bad behavior? We're going to be talking a lot about different red flags, how you want to influence outcomes, how you check the health of your organization, your comp plan, and how you can educate your sales team there. So super excited about that. As far as housekeeping goes, everyone's favorite part, we'll go through it quick. Yes, this session will be recorded. It will be sent out to everyone who signed up here. So excited to get this in your hand. You'll also probably see this shared via different social channels. Everyone is going to be muted upon entry. If you do have questions, please use the Q&A chat if you could. We'll also be checking the chat as well, but Q&A makes it really easy for us just to stay on top of those questions. We will be answering questions throughout, and then at the end, we will be opening up for specific Q&A. So please don't hold on to your questions, get them out there. Let's make this a learning experience together, and excited to learn alongside you. So for those of you joining, if you haven't met me before, Tanner Lacey, one of the co-founders here at Spiff, and right now I'm really heading up our go-to-market strategy side of things. Been with Spiff now for 4 years, and it's been an awesome ride. I am in Salt Lake City, Utah. Kind of bounced around. I was a COVID refugee from the Bay for a while, as we we're trying to figure out where we wanted to land. But super excited to be here with you. And Nick, I'll kick it to you if you wouldn't mind just giving a little intro to yourself, where you're from, and kind of what you do.
Yeah, that sounds great. Hey, everybody. This is Nick Kane, managing partner at Janek Performance Group. Janek is a global sales performance company offering a variety of services to partner with organizations to improve sales performance within their organizations. We're headquartered in Las Vegas. That's where I'm based. Go Raiders. So excited to be here and look forward to learning alongside everyone as well.
What a game this week, by the way.
It was.
Thanks, Nick. I need to learn from your intro there. Yours was much more structured and effective. So I've already started learning. Well, is excited and Nick's obviously excited to have you on here with me and to talk through this. Couldn't think of anyone better really to go through kind of this topic. And for those of you who didn't read too much of the promo, we're pulling a lot of this from a great article that Nick and the Janek Group put out. I actually don't know the date that got put out, Nick, but I read it first about a month ago, and it's really powerful about talking about just how to make sure your comp plan's working, right? And one of the things that I pulled out from this and that I just thought was really powerful was this ideas of like behaviors and emotions, right? Like how are you going to use these in your comp plans? Like what's the impact there? And maybe we could start like just in general, Nick. I just be curious to get your feedback on like what the differences are, why they're both important, and we can kind of roll from there.
Yeah, you know, comp is an area that we talk about with our clients consistently. Sales leaders are constantly focused on this with support from sales ops and finance and the whole organization for the most part. It's so critically important because it drives ideally the behaviors and the emotions that you're trying to achieve or you're trying to drive towards within an organization. And I think companies are realizing in COVID, coming out of COVID to some degree, let's say, that these continue to be moving targets and organizations have to flex and have to change kind of what they're trying to drive towards because things are just so fluid, right? So I think there's a couple things that an organization can do to make sure that some guiding principles, let's say, to make sure that they are incentivizing the right behaviors, they're influencing the right emotions, to make sure that they're driving towards the outcomes that they want, right? And what you see on the screen that you're sharing, Tanner, are very much aligned with our point of view as well, right? There are some things that you can do to make sure that you are incentivizing the right behaviors, how you forecast, the tools that you provide, the coaching, the training and development, the mentorship, all those activities are going to drive towards the right behaviors. And then obviously you're trying to drive towards the right emotion. Emotion drives the right outcomes. But even within the comp plan structure, there's things that you can do to make sure that that you are driving towards the outcomes you're looking for.
That's super insightful. Do you, as you're talking there, do you think one comes before the other? Can they come together? Like, I don't know, I'm curious on your thoughts on kind of how they fall there.
Yeah, I think they go hand in hand. I think there are some things that are intrinsic, and I think organizations are doing a better job, better than ever now, identifying what those intrinsic behaviors are, but also the emotional, the emotion you're trying to drive, and then the personality traits that are in line with the competencies that are in line with top performers within an organization. So I think they do kind of go hand in hand. Personality traits are embedded. They're a bit much more difficult to change. Let's say they're based on values and upbringing and that sort of thing, right? So that's a bit more challenging. I think that's really about alignment, right? And finding those that culturally fit within an organization, that have the personality traits that align with competencies that are in line with, you know, what you're looking for within a role within an organization. So I think that's the first part, is hiring the right people within an organization and putting them in the right roles. But then separately is all around the behaviors you're trying to incentivize, right? So whatever that is, if it's more new business, if it is cross-selling of products, if it's account growth, if it is better margins, you know, whatever those are, the comp plan needs to consider what those key business objectives are and be considerate of those things as you are developing the plans.
Yeah, that's thanks for diving into that. It's really interesting how, like, I mean, obviously I'm a little biased. I've kind of done very little except talking about sales comp for the last 4 years. So I should probably get a new hobby. But it's interesting how, I mean, there's always so many levers and different things you can pull, and different ways that you can really adjust these things to get you where you need. It's interesting, as you were talking, one thought that I had was like boiling this down, right? So before we even get to these levers, like, and you're talking base level, is there like a behavior and or an emotion that you would say is like generally critical? Like, I know we're talking like very tactical on a few of these, but what would you say is like could be like more or less universally be a good behavior and emotion across the board for salespeople?
Yeah. One behavior that we see that needs to be consistent across the sales organization is a genuine desire and a willingness to want to help. You know, the salespeople sometimes get a bad rap, you know, that they're very focused on them and the outcomes and that sort of thing, which I recognize is important as well, right? Like, at the end of the day, we're all operating an organization that needs to stay profitable, and there's certain outcomes and goals we want to achieve. But I think from our perspective, when we assess top sales talent, one thing that we see consistently is there is this genuine desire to want to help, to want to support, and to want to help solve problems and challenges that an organization or that individual that you're working with might be facing. So I think, to me, that's one behavior or one trait, let's call it, right, that I think is relatively consistent. You know, and there's some others as well, you know, obviously hardworking and you know, diligent and self-starting and that sort of thing, I think are all behaviors that are relatively consistent. I think on the emotional side, being driven, being focused, you know, having those intrinsic, you know, emotions that are there, I think are relatively consistent across an organization as well, regardless of role, regardless of if you're managing accounts, growing accounts, hunting for new business, you know, I think those remain consistent.
Oh, I couldn't agree more. I think it's like, you know, that on the head. And I think like these things probably, I don't know if you feel the same, these things can probably adjust a little bit on the size of company you are. Like, if you're a founding sales rep, it might be a little bit different than if you're coming into a team that has 400 sellers or something. But for the most part, I think like that consistent, I think that ground is consistent regardless. And it actually like leads me to like, I think it's a good filler or a good bridge to this next conversation, because like even like your best sales reps, right? You incentivize them the wrong way and you put the carrot in the wrong spot, right? You're potentially opening yourself up for some issues. And I think like one of the, again, an interesting thing that we've been talking about offline and as well as we've kind of read is about different red flags, right? And I think this is one of the questions that I get asked the most when I'm doing any type of comp consulting or talking to anyone around comp. And obviously I think you're much more aware of those than I am, but we see these a lot. These are pretty consistent. I know we worked together to kind of come up with this list here. Curious, like, what's your process? So we can go through these individually, but what would you say is your process for like finding these red flags? I often feel like that's actually the hardest part.
Mm-hmm. Yeah, it is. It's a process, right? I think it's a combination of assessing data, And obviously the starting point there is how accurate is the data that's being inputted into CRM or to other tools like Spiff or whatever the organization is using to make sure that that what they're tracking is an accurate representation of the organization. But I think it's using data to understand where these red flags may be coming up. It's having a close relationship with frontline sales managers and sales leaders. I think is critically important. I think sometimes that group of individuals within a sales organization are underserved. Like it's a tough role. A lot of times they're selling themselves. They have a ton of responsibility. So I think it's really important that we stay really well connected with that audience and use them, right, to gather the information around these things, because sometimes they are clear in the data. Sometimes it requires observation. Sometimes we're trying to gather that information from the sellers directly. It could be a survey that goes out to the organization with questions asked a certain way to gather this information. It really is a variety of methodologies to be able to determine what's going on. Once you have a system in place, I think you can spot check this pretty easily, right? I think especially if the data is being accurately reported, if you have the right reports as an output of that, you can see this. You can identify the red flags pretty easily. I think it's just a matter of getting it set up initially.
Yeah, where would you say is the best place to look? Like, I know like CRM is probably your default there, but even deeper than that, like where are you actually getting this data from generally?
It's mostly CRM, but then it could be some sales enablement platforms. Some of our clients more recently are using HighSpot as an example, that is tying content, specifically to stages of the sales process, and some of those added behaviors. We have a learning reinforcement technology we offer called Expert that helps tie metrics to key sales behaviors, right? So a lot of it is understanding how these things are showing up on calls and with clients, and then some of it is just again reported data on measuring the results of this, right? Because red flags is one thing, right? So what is going on? But I think a lot of times what we're trying to do is go a bit deeper than that to understand why they're happening as well. So the red flag gives us an indicator, okay, we need to fix this problem, whatever that challenge is, but why is it happening? A lot of times you have to go into the weeds a little bit to find that out.
So hypothetical question for you here. Mm-hmm. Is it even possible to build a comp plan where you don't at least flirt with some of these red flags? Like that's one thing I think about a lot, where it's like, it seems like a lot of the times it's a lot more about like plugging the hole in the dam, right? Where you're oftentimes that's how a lot of times we approach it. Is it possible and to build one that solves these problems without flirting too close? And if so, like, how would you go about that?
I've never seen a comp plan that was foolproof. It's impossible. One thing that we always challenge our clients thinking around is, what are the unintended outcomes of this change you're making or this new process you're putting in place? So yeah, I would say it's impossible to not have something that comes out of that. I think that's even more the reason why we talk about the importance of running a comp plan health check on a consistent basis. Because if you wait, most organizations are revisiting comp plan typically annually, sometimes it's beyond that, right? Like they may assess quotas and they may assess goals and that sort of thing, but the plan itself remains consistent beyond that time period. We encourage sales leaders to look at this more frequently, at least as an assessment against the outcomes they're trying to drive and the strategic objectives they're trying to get to. Those health checks help identify where those gaps might be. So you should be looking at this consistently and be willing to make changes along the way. But I've unfortunately never ran across a comp plan that was perfect.
I don't know how many times I've tried to write that content article where it's like the perfect comp plan, right? It's just like, I just think it's an interesting thing. It's like, it's like a art, not a science type of deal, right? A lot of the times where it's like, you can do your best, you can try really hard, but you always leave yourself a little liability, and you have to trust the people that they're not going to take advantage of that. But no, that's super. Sorry.
Yeah, I would just add, I think there's an opportunity to ideate too much sometimes. You try to solve for everything, and then there's no action that takes place too. We see that with clients. Like, okay, we're working on the plan. A month goes by. It's like at some point we have to roll this thing out. So I think sometimes you have to trust the process, do the best you can to think of all of these potentials, knowing that nothing's going to be perfect. If we can get it as close as possible, we're good. and then just continue to check it, right? And see how it's working.
Totally. And I think a lot of these things you can't learn until you stress test, right? And it's impossible,
Absolutely.
more or less, to stress test those. There's without that. But before I move on from red flags, I do want to spend a lot of time on the health check.
Yeah.
Is there one here that you would say more than anything you would watch out for?
Yeah, I'm just looking through the list. I mean, it's tough to prioritize any of these, just because every organization is going to view the priority on these differently. I think off-base quotas is a big challenge, right? Like, I think if a seller doesn't feel like their goals are realistic, or they can achieve certain revenue targets or certain income targets, let's say, mostly, you're going to have a super demotivated rep, and you're going to have somebody that is going to be far less productive. So to me, like, as a starting point, I think quotas have to be determined and assessed based on reality, and not just where the organization wants to be. Sure, they should stretch and they should, push and that sort of thing. I absolutely agree with that. But I've seen organizations just pie in the sky goals that are just unrealistic, and you get a seller, call it motivated or whatever, but they start to quickly realize it's pretty off base. So I think as a starting point, to me, that one really stands out. A lot of these others, I think, can be solved along the way here, but that one stands out to me. What about you? Any of these stand out to you?
Yeah, I mean, the one that hits home the most for me, off-base quotas does as well, especially like coming from an org where we've been trying to figure this out, right? Like, I know we do comp all day, but like, we're a growing business. It's hard to actually nail that down. And so we've had the issue of actually the other side too, where it's like you set it too low, and you end up in a very different scenario, a much more anyways, I mean, there's ways to get around those. The one that's interesting though for me is the stretching the truth. And I think the way that I look at that is like, if you're incentivizing just closing too much, right? Like you might be tossing really bad deals over the fence. And it seems like that's the one that, like, almost regardless of how you set up your comp plan, you just like, there's very like that. It's hard to, I mean, there are things you can do, right? Like clawbacks. You could do not paying out until they're on board. Like, there's a whole bunch of different things you can do depending on your business type and sales cycle, et cetera. But that's the one to me that could be the most like harmful. Like sandbagging, like, I don't know, that's one that I just don't think we'll ever avoid ever. But like, at the end of the day, you do drag in that deal for the business. Suboptimal product mix, to me, that's one that's like more or less easy to kind of tweak. But the stretching the truth and off-base quotas, honestly, are ones where it's like it's hard to fix that, and it's hard to necessarily recognize it until sometimes it's too late. And like, you can always adjust that. But anyways, I totally agree with you on off-base quotas. I think the next one for me would be stretching the truth.
Yeah, I would agree with that. That stands out to me as well. We have organizations that there's a lot of time, energy, resources, costs associated with pursuing opportunities. And that truth is critically important to managing cost and managing time. So we have some of our organizations that we work with put more formal processes into place that require a seller to present a certain amount of details around that organization, their needs, before they're even willing to invest into pursuing that opportunity, as an example. The outcome is large, or the potential outcome is large, but for years they were just operating based on trust, right? And certainly that wasn't, not saying anything negatively. I think sometimes sellers misinterpret. We all misinterpret sometimes how strong that opportunity might be. So that, sometimes it's good to put some better processes in place and better levers in place to keep, that information as clear as possible.
Yeah, I totally agree. And actually a great question from Dave just came through. I'd love your thoughts on it. It says, is stretching the truth where the AE says says at the beginning of the quarter, he feels the deal has 75% chance of closing, but it fails to close because he was too optimistic. Would you kind of put that in stretching the truth? Would you look at that more as like a forecasting behavior? Where would you kind of label that? And Dave, if you have any more questions on that to follow on, let me know.
Yeah, I mean, To me, that's how I would categorize that. Yes, I mean it is
Okay.
it is related to forecasting, right? But to me, yes, that's how I would define that to some degree. That is an example of behavior stretching the truth. I think that's what Dave is saying is exactly what I was just saying there a second ago. I don't want to fault a seller for being optimistic. Like, I mean, I don't want that behavior I don't want to shun that behavior. I think that's great. But it is difficult at times. I think the counterpoint to that, if we're going to solve for that, is it requires better coaching and helping the seller better assess the opportunity. Like, we've all been there. We're working with a seller and they have a good discovery call as an example. They come out of there and they're like, this deal's closing. Like, I feel really good about it. But there's a whole series of questions that weren't asked around buying process, around budgets, around, just certain things that, we have to dig into to really validate how likely that deal is to move forward. Or at least put us in the best position to move it forward. But they're jazzed and they're energized because it was the best call they've had it all week, as an example, or whatever. So I think it's not necessarily the seller's fault. I think there's an opportunity to coach and to reinforce certain behaviors and to just help them think that through. Like, let's talk about that. How likely is it really? Like, did you go through these areas? There's an opportunity to debrief. So again, I would just say that's where a really strong sales manager can come in and help the seller think through that opportunity a bit differently.
Yeah, no, I think you hit it head on. It's funny, like I almost would put this one in between stretching the truth and like the opposite of sandbagging, right? Like, a lot of the time we get like, it's funny. So Dave, you're talking about how you see this a lot in junior AEs, which is like very consistent with what I've seen.
Yeah.
What's funny with more senior AEs, you would often see the opposite, where they will under, right? And it's because they know they're going to be held accountable. And I think there's going to be there's a lot of coaching you can do. I think there's also, and Nick, correct me if I'm wrong here, there also tends to be like a learning experience that when you over forecast and you're too optimistic and then you get called on that number, and then they tend not to do that as much anymore after they figure out like that. And it seems like it kind of can balance itself out in a lot of ways, but I don't know if that's fair.
No, I think you're right. Yeah, there's definitely a pendulum swing there for a little bit. How do we find the middle there, I think, is the goal, as a selling organization. Like, we don't want people to under forecast, because then we can't make educated decisions as a sales leader around those things, right? Around things that we want to make decisions on. Over forecasting causes similar challenges as well, right? So I think it's coaching and I think it's process, honestly. Like, there should be certain boxes that are checked, let's call them, or certain things that need to happen to advance that is tightly monitored or tightly reported on, let's say, I guess better said. So I think there's a way to get there, but I agree. I think that as soon as a junior AE over extends themselves right around forecast and they realize it doesn't happen, and then they have that conversation, I think they start to adjust that behavior quickly.
Yeah, no, I would say the same thing. Awesome. Well, this is awesome. I've loved this conversation. If anyone else has more thoughts around these, I'm going to put a pin in the red flags for the Q&A, because I really want to make sure, Nick, that I give you a chance to like this was for me like the biggest thing that I've taken away from our relationship so far. The articles that you put out, that I think is just like a great action item for everyone to take out of here. And it's creating a sales compensation plan health check. So you guys toss this on here. This is an example of one that you do. I mean, I just want to kick it to you and just give a quick overview and then walk us through what we're seeing here.
Yeah, absolutely. Yeah, happy to do that. Right. So again, this is one of the things that we discuss with our clients consistently when we're talking about sales comp, is this idea of running a health check against the comp plan on a regular basis, on a regular interval. For some organizations, this might be done quarterly. Others, it might be done biannually, whatever, right? Some are doing it monthly, right? That they're that close to the data and they're making decisions in real time. So let me kind of walk through some of the points here. The first thing I want to think about is who the audience is that is running through this health check, or who's involved in a health check. Ideally, it's the sales leader within an organization that is running this activity, right? So it could be the CRO, it could be the EVP of sales, whoever is running the sales organization is typically leading this activity. But then you'll have support from some of these other departments that I've listed here, right? So it could be finance, HR, marketing, certainly sales and revenue ops, and even sometimes training and IT get involved, depending on how an organization manages the plan documents, commission calculators, whatever the organization uses to transparently communicate the plan. So I think the first thing is who's involved, right? I think all of these roles play a part in actively assessing this. The left column that you see here focuses on the starting point, which for us is what are the strategic objectives that the organization is looking to achieve in a calendar year. Or in a quarter or whatever, right? Typically a calendar year is what we're driving towards there. So these are just some examples that we're focused on for this year at Janek. So I wanted to include some of these. So you see, we're focused on achieving our, certain revenue goals and what that goal attainment looks like. New business year over year. Most organizations are focused on that. We'll talk about that in a second. And then just controlling our compensation cost as a cost of sale as it relates to revenue. So those are, as an example, 3 of the main strategic objectives we had going into this year. So it's consistent to just be aware of that and know what those are. The middle column, it shares financial performance. So this gives you like a year-over-year comparator, excuse me. I'm sharing just a few of the metrics that we look at, a few of the KPIs that help understand how things are working on a regular basis. So you see the top left there is the revenue attainment. Basically what that is total sales divided by the total goal. So how are we tracking against the goals that we've set out for the year? Good to just be aware of that as we're tracking against some of these strategic objectives. To the top right there, you see the percentage of revenue contributed from new business, slightly down right now overall against the goal. Most organizations focus on new business development, new logos. You hear that consistently. That's helpful, right? And that's good to know. And organizations want to do that for a variety of reasons. I think sometimes we underestimate the importance of account growth and managing existing relationships. We know the cost to acquire a new customer, is typically 5 to 8 times the cost of continuing to generate revenue from existing accounts. So I keep reminding our organization, yeah, that's important. But revenue that comes from existing accounts to me is equally as important, right? So again, just a thought there. The bottom left talks about sales comp as a percentage of budget. So basically that's the total sales comp divided by the budget we have for the year. And then the bottom right, this is an interesting one. I don't know how many of those that are on today look at this, but essentially that sales comp cost of sale, the formula there is total sales comp divided by total revenue. So that is something to look at as well, right? Every organization has a different number, right? A different margin that they're trying to manage the organization with from a profit perspective. 5% is by no means a benchmark, right? I mean, every organization is going to do that differently. You see that it's up 1%, so that's not a positive in this case, right? It's 1% higher, which is why it's in the red. But every organization is going to manage that differently. But we're looking at that as we are looking at cost, right, as it relates to sales. And then on the right side is essentially just an example of how we look at one of the strategic objectives, which is year-over-year new business growth. So you see the line graph there. That is assessing year-over-year growth. I encourage organizations to look at the assessment of strategic objectives in a variety of ways. Could be spider graphs, could be histograms, just ways to look at things historically and slice that data differently is going to be useful. I will also say, and I come back to this sort of North Star principle, the data is only good as what's being inputted, right? So just that's something to think about is how well is the organization using the tools? How well are they using a tool like their CRM, like Salesforce or whatever you guys in the organization has in place? Assuming that the data accuracy is good, then I think slicing this data in a variety of ways to assess how you're doing is helpful.
That's awesome. So a couple of questions for you here, and Dave's coming in strong with some great questions. One that was really interesting for me as well that I'm curious about is what do you see as far as like, I know we're not talking benchmarks on the sales compensation cost of sales, but what's a healthy range that you usually see?
Yeah, it really just does vary. It's tough to answer that one, Tanner. Just an organization, a startup might look at that totally differently than an established organization or a blue chip. I've seen it range as 5% to 25%, right? I mean, I've seen it range that much depending on where the organization is. So it's tough to say, it's tough to say something more specifically on that one.
Okay. Yeah, no, that's super fair. Yeah, it seems like a lot of it probably also has to do with margins and process and cycles and kind of that whole gamut there. So totally agree with you there. Um, as far as like someone wants to get one of these in place, what's step one? Like I think that's oftentimes the hardest thing about implementing something like this, right? Is like just getting started. Like, what would you suggest is like this is what you do today to get this in place?
So I think one of the first things I would recommend is, again, just keeping things simple and just getting the activity going, right? I think if you can get on a regular cadence, and consider, it always comes back to what are the strategic objectives, right? So that's to me is the starting point. And then it's thinking through, okay, how can we assess against that? How do we know how we're doing against those objectives? What are the data points we need to see to be able to assess that? So I think, again, the starting point is be committed to the activity first and foremost, right? I think the organization has to understand or has to agree that this is important. And then once that activity is established on a regular cadence, then it's, okay, what are the objectives? What are we trying to accomplish? How do we measure against those? And then how do we get the data to be able to measure against those? And what do we want to see to be able to assess that?
I think that's so like I love that. Just get in the habit, right? Get it on the calendar.
Yeah.
Such like very good advice there. Thank you.
Yeah.
So moving off this and like I do want to come back. Probably looks like we have a few potential more questions on this, but we'll maybe address these in Q&A. I just think it's really important before we start pushing time too hard to make sure that we kind of address this. And I totally stole this from your article. I gave you the credit down there at the bottom, but I thought this was really powerful. So I'll just go ahead, read it, and then we'll go from there. Like, most importantly, educate your sales team about the sales compensation plan and how they can use it to make more money. If they do not understand the plan, they will not modify their behavior and will continue selling the only way they know. I felt like as we were putting this together, this was a great thing to end on, because like we're talking about a lot of different things, right? Like different red flags, different motivations, behaviors, et cetera. We're talking about how you can check the health of your comp plan. But it felt like this was a point that was made that was kind of like at the crux, right? Like, but if you don't do this well, the rest of this is going to be like at least not as effective.
Yeah.
Would you mind maybe diving a level deeper there and adding a little more to that?
Yeah. Yeah. I mean, I think to me, education around the plan, and I'll add transparency, strong communication, and messaging around the plan, to me, are all critically important to launching any new plan or even updating plans. We have a tendency to think that a seller is just going to get the plan, right? Like, here's the plan document, read through it, you're good. And that is a huge pitfall, right? Like, to me, we spend when we're assessing comp with our clients, we spend as much time thinking about the communication, the messaging, and the change management, let's call it, of that plan implementation as we do the plan itself. Because to me, the more comfortable that a seller is around the understanding of the plan, and not just the plan, not just the levers, not just the plan itself, but why, why did we put these things in place? What are we driving towards? What are the behaviors we're trying to achieve? To me, the whys are just as important to address. So we want, and then we want to think through how that messaging gets communicated, right? Like, are we gaining executive sponsorship? Who's communicating these changes or these components? And make sure that whoever is communicating it, if it's a frontline manager, if it's a sales leader by region or whatever, that they are fully equipped to be able to do that in a very positive way, and essentially sell the plan, if you will, like market the plan in a positive way. If the seller feels educated around the plan and they understand how they can use the plan to generate more revenue for themselves and for the organization, you're going to drive towards better outcomes. But like the quote says, if they don't understand the plan, or I would add, if it's too complex, if it's too difficult to interpret, that's one thing we always talk about, is just keeping it simple when you're developing these plans. The more levers it had, the more it just comes back to how easy it is to understand and how educated they are on the plan. The more clear it is, the more likely they are to conduct the behaviors that you want them to achieve. If they don't, they're just going to keep doing things the way they've always done them.
Yeah, I just think that's such a great call out. I've maybe some bias here, but it's funny. We like organizations today spend so much money trying to like adjust behaviors and trying to like really push the sales team one way or the other, whether it's forecasting tools, sales performance management tools, all these different things that they're investing into, like really try to push. And it's funny. I think that like we often are underutilizing one of the most powerful motivators, and which has been one of the most powerful motivators forever, which is pay and incentive. And like I think a lot of the times we leave a lot on the table because like we just haven't really enabled or educated our teams well enough to understand what they can do with that comp plan. And so I totally agree. And it's like, especially if we're trying to make it better and to improve it, like I think that there's a common pitfall. And the reason is like when we create these comp plans, or we're in the meetings where they get created, like a lot of times like it clicks for us, like we have this background, it makes sense. And I think oftentimes when we pass it on, we just kind of assume it'll make sense to them too. And just like, cool, it's easy. And I totally agree. Like I've heard a few times, and I agree with for the most part, where it's like if your sales rep can't repeat their comp plan or tell you what their comp plan is in a few sentences, then it's too complex. And like I say that knowing that there are businesses and companies out there where it's like there has to be some complexity, just whether because of the product that they sell, the sales cycle, the onboarding, implementation, that type of stuff. Like sometimes you just can't get away with it if you need to keep your liabilities healthy. But no, I just think this is such a powerful point. And as you guys are going on consulting, how are you kind of helping your clients like actually make this a reality? What are you kind of doing, putting in place to help them educate their teams?
Yeah, I think it's just understanding the structure of the organization, understanding the structure of the plan, and making recommendations on the best communication strategy to get it out there based on that organization's structure. You know, if they're set up regionally, if they are, decentralized, we're just kind of thinking through what is the best way to provide that level of education. And sometimes it's in a webinar like this, right, or in this type of format. Other times it's through some sort of, we've seen organizations develop a quick e-learning module, right, that will walk a seller through a plan with specific components and call outs. Sometimes it's a plan review, and then there's an open Q&A. There's just different ways of doing that. I think a lot of it is the messaging that goes into it as well, right? It's not just how to educate on the plan, but it's the communication strategy around it. But again, it goes back to the whys. But yeah, we're partnering with leaders in different ways to figure that out.
Cool. Yeah, it's very cool. Totally. I mean, we've tried a few different things, or as we've talked to. I am definitely not a comp consultant, so I don't want to try to call myself that. But as I've work with friends and different clients and things as they work through these same problems, it just seems like that's a common thing where it's like you just got to figure out how to teach your teams. You got to figure out how for them to understand. So, well, Nick, I mean, I know we have a few questions that are kind of rolling in, but before we roll into that, any last things you'd like to kind of hit on with education in this last point here before we dive into a Q&A?
No, I would ask anybody that's listening today to just think about how well you're doing this now, and be committed to it whenever you're rolling out a new plan. I think I hear that. I would just say I think I hear that from sales leaders at times where they feel like they're doing this well, and they feel like they're communicating it effectively, and then you start to peel the onion a little bit, and you realize it's probably not as effective as they thought it was, right? And sometimes it very much is. I mean, don't get me wrong. Sometimes it's amazingly done, but sometimes it's not. So I think it's just a quick check-in, a good test to say, okay, how have I done this in the past? What were the outcomes of that? Do my sellers feel fully educated? If any of those are no, then it's just important to think about modifying the behavior moving forward so you can, get the most out of the plan.
Cool. Yeah. Thank you for that.
Yeah.
All right. So I know we have one question here. I'm going to switch to Q&A. And then before we end, I do want to kind of have I always like to finish off with asking a key takeaway that you'll have, Nick. So I'll let you kind of chew on that because I'll put you on the spot here again in a second. But a great question that came in, and I'm going to probably say this name wrong. It looks like it's Bettina. And it's a plan can be very simple, but the ROE can be complex. How do you handle that?
That's a tough one. So that's a great question. Return on investment, or they call it ROE, difficult to assess, right? And it's one of those questions that does require some time to think through. I would go back to this idea that every organization is different, which it truly is, right? It's tough to assess how an organization can measure that, right? If it is, again, more new sales, if it's profitability, ROI is, measuring ROI is always the most difficult. Sorry, I see another question coming in. I wasn't sure if it was ROI or ROE.
No, yeah, I think it's ROE. So like rules of engagement.
Okay.
So she thank you so much for clarifying on that. Just the rules of engagement and crediting policies.
Sorry, misunderstood. Yeah, again, I'd say another interesting challenge as well. That's a bit more difficult. A lot of that comes down to how the organization is structured from a accountability perspective. Is it, again, is it named accounts that are being managed? Is it vertical? Is it territory? Rules of, and is it direct seller versus channel versus distributors, right? There's a lot of things that go into establishing the right rules of engagement, right, and the right policies there. Yeah, I think a couple things that stand out there. One is how well the open lines of communication are around that. There's a couple things that stand out there. Open lines of communication around deal management and opportunity management, I think, is a big one. Do you have a culture that breeds that open line of communication, right? So a seller feels comfortable coming in when they may hear something differently or feel like perhaps full credit isn't attributed to their activities. So I think that's one way to really make sure that it's managed properly. And then I think another is just technology can assist with that as well, right? Perhaps CRM, Salesforce might have an opportunity to split those deals on the back end, or there may be ways to measure that or to monitor that differently with the use of the right technology. So I would say a lot of it is technology enablement, but also just the right culture within an organization. Tanner, anything you would add to that? That's what comes to mind for me.
Yeah, I mean, as far as like helping people understand, I know this is like, I'm going old school here, but oftentimes a simple, like some investment in getting a deck or an enablement course or something designed that kind of helps break through that stuff is really helpful, especially for your managers who are doing that. I think the question that Cindy asked here is actually a great follow-up, and I'd love to get your thoughts on it, Nick. Is like, okay, ROE was not followed due to inaccurate Salesforce account ownership assignment, split credit, or double comp. I would say, like, I'll go hop in here on that one. I'm biased probably, but usually double comping is the safer way, assuming it doesn't make an unrealistic liability and that it's not like consistently happening over and over again. I think it's really situational, but Nick, I don't know what your thoughts are there.
Yeah, I lean in that direction as well, just for level of satisfaction to the seller and to motivate the seller to do well in that regard. The opportunity at the end of the day, to me, is most important, right? Are we acquiring that opportunity or not? So if that helps motivate and it means additional cost, I think to Tanner's point, if it becomes exorbitant and you just can't do it, then that's one thing. But if there are ways to, again, modify cost of sale or whatever to be able to accommodate that double comp, I would lean towards that in that regard.
Yeah, it seems like if it's possible, that's always,
yes.
It's always nice to favor to err in the favor of your reps. I think the issue is when it becomes like every single time or it becomes consistent, then you've got a bigger issue, right? But guys, we are out of time here. We have a few more questions. With these questions, please feel free to reach out to myself, Nick, whether it's on LinkedIn. You have both of our emails here below. I know both of us are happy to respond to those. Nick, real quick, just 30 seconds, key takeaway for you from today.
There was a lot that we talked about today. I think we talked about the importance of education. Make sure you roll the plan documents out effectively. Give the sellers the tools to feel confident and empowered, I'll say, with the plan. So that one stands out to me. And if you're not running those regular health checks on the plan, I would encourage you to do that. I think it's a great way to consistently check in and make sure that your plan's on target.
Awesome. And I think just to kind of build on that, I think for me, the one thing that I took away is just the health check in general, right? And especially like with the interesting one that I haven't really thought about was just like basically the cost of sales comp and how that's it actually could be a critical thing to measure. And again, just finishing on the education piece that we hit on, like just such a critical way to make sure that you're enabling your teams correctly and making comp effective and motivating like it should be. So awesome. Well, Nick, thanks again, man, for hopping on this with us. Everyone, thank you so much for the great questions here. Again, please don't hesitate to reach out, and
Absolutely.
thank you for all joining.
Yeah, thank you all. Thanks again, Tanner.
Hey, thanks, Nick. We'll see you.